Hello students, good evening. Now today we are going to see for module number 2. Now module number 2 consists of 6 chapters. We'll see one by one. The first one is accounting cycles. Then you have to see journals. Then the next topic is subsidiary books. After that the fourth one is ledger. Then we have to see bank reconciliation statement, and the last topic in module number 2 is expenditure in receipts. So it consists of totally 6 modules. One by one, 6 chapters. One by one we'll see all chapters. First in module 2 we are going to start with this accounting cycles. Now here we are going to see what is accounting cycle. Basically, what are the stages in accounting cycle, types of accounts, what is the rule of the account, what are the basic rule of debit and credit, and all these things. Now, accounting cycle involves, there are 9 stages in accounting cycle. When I say I am going to prepare a balance sheet, before the balance sheet there are 8 stages which I have to cover, and then only I can reach to the balance sheet stage. The first one is in your accounting cycle, stage number 1 is selection. Here you have to select the business transaction, or for recording a transaction, your transaction should be a financial business transaction. The first one is selection of business transaction. Second stage is analysis of the transaction. That means in analysis you have to see whether you are receiving any benefits or are you giving any benefits. So are you a receiver of the benefit or are you a giver of the benefit? The third stage is classification. The transaction will be classified, or the account will be classified either as an asset or a liability or an income or an expense. So first one is the selection, analysis, classification. The fourth stage is the rule. Once you classified your accounts, you have to identify the rule. The rule is what? What is the rule? Rule means debit all assets and expenses, and credit all liabilities and income. So if your assets and your expenses are increasing, it will be debited. If your liabilities and your incomes are increasing, it will be credited. The next one is rules. Fifth one is recording. Recording means you have to record these transactions in your journal, which is a book of prime entry, and after that in a subsidiary books. After recording, you have to prepare ledger accounts of this transaction. You have to do the posting of this transaction. So the next stage is, after the recording, is the posting of this journal entry into ledger accounts. Once you post in your ledger accounts, you have to prepare a trial balance, which is a statement of all the ledger accounts, tallied ledger accounts. Next one is after trial balance, or from trial balance you can prepare profit and loss account, from which you come to know what is the profit or what is the loss, what is the income and what is the expenses. And at the last stage, that is the 9th stage, that is your balance sheet, which shows the financial position of your business, which shows the assets and liabilities of a business. So these are the 9 stages in your accounting cycle. Now, basically what you mean by accounts? Now, account means a summary. When I say a particular account, whether it may be an individual account or it is something of thing account or it is an asset or a liability account, what does it show? It shows summary of all the transactions of that particular account in a ledger recorded on a particular date for a particular entire accounting period. So all the accounting entries are posted in that ledger, and at the year end, that ledger balance is tallied, and whatever the balance is there, that is carried forward to the next year. So that is an account. Now basically here we can see there are basically 3 types of accounts. One is a personal account, real account, and the nominal account. Now personal account is a account of an individual or a group of individuals, or you can say group of artificial persons. Real account is an account of your assets, or your whatever you can say. Real account is an account of your current assets, your fixed assets, your investments and everything. And last one is your nominal account, which includes your account of income or an expenses, or you can say profit or a loss, or you can say loss or a profit, whatever. Now here basically the account follows the double entry system of accounting. From initial itself I'm mentioning every debit has a corresponding credit, every debit has equal amount of corresponding credit. So the rule of the double entry system says debit equals to credit. Now what comes in your debit items? We already mentioned assets and your expenses is your debit item, liabilities and income and the capital is your credit item. So whatever my assets and expenses are there, that should match with my liabilities and my income and my capital. So that equals debit equals credit. That means assets and expense equals to my liabilities and my income and my capital. Now there are rules for all these 3 types of accounts. Now the rule for the personal account is debit the receiver, credit the giver. Rule for the real account is debit what comes in, credit what goes out. And rule for the nominal account is debit all expenses and losses and credit all income and gain. These are the three fundamental rules of three: personal account, real account and the nominal account, which you have to always keep it in mind, and accordingly you have to give effect in your transactions or in your journal entry. So with this we will end with the accounting cycle. Next topic is your journal. Now what do you mean by journal? Now here we can say journal is a book of prime entry, or you can say a book of original entry. Basically the word jour is a very French word. It's a French word. Jour means a day. So recording of your day-to-day transactions in a particular type of books of accounts, that is called as a journal. So here we record our financial business transaction date-wise or in a chronological order in a journal book. And this every page of that journal book gets tallied. Debit equals to credit. So we write in the transaction for the entire year from 1st of April to 31st of March in my journal books. So that is also called as a book of prime entry or a book of original entry. Now the next one is why the journal is required. What is the utility or usefulness? The first one is we can keep a permanent record of all the transaction which has happened during the entire year. It becomes as a legal proof also, as a legal record also. Again, it shows the complete record of our financial record or financial transaction, whatever the transaction has happened and of whatever amount. So there will be a complete record of all your business transaction, and it shows the division of the work done. So these are the utility of journal. Now in journal, some goods accounts are classified into purchase account, sales account, purchase return, sales return, whatever. Purchase means, or you can say, what do you mean by purchase account? That means whatever the goods which you are purchased in, either in a cash or a credit, it is recorded in purchase. What are the goods which you are selling in cash or in credit, that is recorded in your sales account. Purchase return means if I purchased something and that good is not of up to quality, I am returning those, so that is recorded in purchase return. On the other hand, sales return, I have sold goods to somebody, but somebody is not, that goods are not matching of that quality. They will return the goods, so it is recorded in sales return. One more account I will write over here for the goods account is my, you can say, other goods accounts, to record goods lost by fire or goods destroyed by fire. You can say goods lost, or you can say goods stolen over by somebody, or whenever the goods are withdrawn by the proprietor for either personal use, that will be recorded in goods taken by other accounts also. So here, next we are going to say in this chapter is meaning of discount and its types. Now what do you mean by discount? Discount is a very common word. Everybody knows what is discount. Discount means something reduction in the value, or you can say some concession or some type of rebate which is given from the original price. You can say for example, this is of 10 rupees of thing. If it is, he is giving me at 9 rupees, then that 1 rupee extra benefit which I am receiving, that is my discount. So it is nothing but a reduction or a concession in the value of an item. Now basically the discount is classified into two categories. One is cash discount and the another one is a trade discount. Now cash discount is given so that to prompt immediate receipt or a payment of cash. Sometimes when I'm urgent need of cash, I can say if you are paying me immediate cash, so and so cash, I'll give you 5% discount. So when the discount is received for the immediate receipt or a payment of cash, it is called as a cash discount. On the other hand, what is a trade discount? When it is being given to promote the sale or to increase the quantity of sales. Now the trade discount is always given on the quantity, number of quantities you have purchased. More the quantity you purchase, more the trade discount you will get. And on cash discount, if you pay immediately cash, you will receive the cash discount. So both are different. One is the cash discount and one is the trade discount. Understood? Now here we are going to solve 2 or 3 journal entries so that you will come to know how the journal entry is being prepared. And after the journal entry, each after the journal entry, narration has to be written down. So that shows the nature of the transaction. Narration is nothing but a brief explanation which always starts with the word being, B-E-I-N-G, and that shows the description of the transactions. So let's start with one by one. See, the transaction number 1 is now first thing to be recorded in journal is the journal entries are to be recorded in a chronological order as well as date wise. फर्स्ट डेट को जो हुआ वो फिर सेकंड को, फिर थर्ड के बाद अगर फोर्थ फिफ्थ सिक्स को सपोज कुछ भी ट्रांजेक्शन नहीं हुआ, सीधा एट्थ को हुआ है, तो विल राइट इट ऑन एट्थ ट्रांजेक्शन. सो ईच ट्रांजेक्शन हैज टू बी रिकॉर्डेड डेट वाइज एंड द फॉर्मेट फॉर द जर्नल एंट्रीज, फर्स्ट column is date, then the particulars where the entry will come, then your ledger folio column, then your debit rupees and credit rupees. And at the end, once you finish with all your monthly journal entries or whatever journal entries, each page with the debit and the credit will be total. So we'll come to know each debit has a corresponding credit. Now let's see with 2-3 examples. The first entry you have been here given with is on 31st December 2013, there is a cash introduced in the business of rupees 10,000. Now when I say cash introduced, that means cash has come in. So cash account debit rupees 10,000. See the entry, cash account debit. In debit I have put rupees 10,000 and it has been introduced as a part of capital. So credit mein to capital account rupees 10,000. So cash debit, capital credit. And what will be the narration is, it should always start with the word B. B, cash introduced in the business as a capital. See the next entry is on 3rd of January. After that, paid rupees 450 to Mr. B and received a discount of rupees 50. Now here we have paid a cash of rupees 450 and while paying that 450, I have received a discount of rupees 50. Now to whom I have paid the cash? Mr. B. Now Mr. B is the receiver. So Mr. B account debit, you can say, in debit I will mention 500 rupees. 2, I have paid a cash. So my cash has gone out. 2, cash account rupees 450 and I received a discount. Now discount received is my income, that you can call as a nominal account. Credit all income and gain. 2, discount received rupees 50. So Mr. B will be debited by 500, cash will be credited by 450, discount received will be credited by 50. So 500 and 500 tallied. So being narration again you will put being cash paid to Mr. B and received a discount. Understood? See the third one again. Received rupees 2,500 from Mr. C. Now I have received the cash. From whom? From Mr. C. C is the giver. And I allowed him a discount of rupees 500. Now how much cash I have received? 2,500. So what has come in? Cash. So cash account debit 2,500. Now I have allowed him the discount. Now discount allowed is my expenses. So what is the rule for the nominal account is debit all expenses and losses. So discount allowed debit rupees 500 to who is the giver over here? To Mr. C account rupees 3,000. So cash account debit 2,500, discount allowed debit 500 to Mr. C 3,000 credit. So being cash received from Mr. C and allowed him a discount. Very simple. And the last one you can say cash sales of rupees 8,000. Now here I have made a sales. That means my goods have gone out. And what I have received? Cash. So again cash account debit rupees 8,000 to sales account rupees 8,000. Sales means my direct income or you can say my production income. Understood? So that will be credited. So being cash sales of rupees 8,000. This how, and then at the last you can see over here I have totaled my journal book. So each debit will be credited. So here my journal entry is getting tallied by rupees 21,500 in debit and 21,500 in credit. So this way you will record each transaction date wise. You will give the effect respectively whatever account is debited, what account is credited, and after debit and credit you see कि जितना अमाउंट डेबिट में गया उसके कॉरस्पॉन्डिंग अमाउंट क्रेडिट में आना चाहिए तो ही आपका जो जर्नल बुक है वो टैली होगा. दिस हाउ यू कैन सॉल्व द जर्नल एंट्री ट्रांजैक्शन. थैंक यू.